Okay, bringing you a new stock today for your perusal, and that is ESPR Therapeutics. They're currently sat at $1.67 and have a market cap of around $350 million. They currently have a drug for lowering cholesterol, and that's called bempedoic acid. They are offering that alone or in combination with ezetimibe. So that brings me to my first bullet point, which is the potential of these drugs. So if we click in and look at some of the competitors, the main competitor in the market are normal statins, and they're currently generating around $20 billion a year. There's also an injection market pulling in around $3 billion a year. Bempedoic acid has also just had its indication opened up and now has a potential market of 70 million people. At 5k a year, they only need 200,000 people to get a $1 billion revenue. As you can see here, a ball point to the potential is the extended label, which I've just spoken about, and also that they are the first FDA-approved non-statin oral drug. Now this is really significant because there's a lot of people out there that aren't currently tolerant to statin drugs, so to have an alternative could be a real life changer for them. So next on the list are the international partnerships. And this is one of the things that's really quite exciting about this company. They've managed to push out already into these other countries, and these other countries are selling the products really quite well. Actually, I go much further to say that they're actually selling better than ESPR. Although the revenues coming in are less for ESPR, they're only getting a small percentage of those profits, and also with other countries, they're selling these products at a much lower rate. So I'm guessing their customer base is probably much higher than what it is in the United States. So on top of the royalties that they're getting in, they're also getting milestone payments, and these payments have already started to come through, and there's still more than a potential $1 billion yet to come. So next in the list is the low market cap, and it's an incredibly low market cap. It's only at 350 million. And I normally like to do a 10x PE ratio with my biotech stocks, which means that this company would only need a profit of around $35 million to meet its valuation. And I think that's easily achievable, even in the face of the bear points, which I'm going to go through now. And so the biggest bear point that you can see here is their slow growth. Now, it surprised me to find out that they're only selling $28 million in the US each quarter. And the reason that surprised me is that this drug has already been out for 4 years now. So if I were to compare that with my currently favourite company, Ardelyx, their latest drug is already pulling in $37 million per quarter, and it's only been 3 quarters that that drug's been released for. Actually, it's not even been 3 quarters, it's been 2.5. So you can see here that a $28 million revenue per quarter really isn't that good for a drug that's been on the market for 4 years. But the big thing for this company, and the reason that you need to look out, is the ball point here, and that is that they have just broadened the label for this product. So whereas before they had a market of around 10 million patients, they now have a market at around 70 million patients. And at the same time, they've also increased their commercial payer and their Medicare coverage. So the stockholders here are really looking for a turnaround in the next quarter. Also, if we go to their presentation, we can see here that there's been a sharp uptick in the growth. One thing that does worry me here is that it leveled off a few years ago. They did a study called the Clear Outcome Study, which came up with some really good results, and since then it's been growing. But if the benefits were so clear to patients before, I do wonder why it plateaued off here. But for now, the growth is the highest it's ever been, and hopefully in the next quarter it will be higher than that. So in the last quarter, they increased their quarterly revenue by about $5 million. And I normally like to look 5 years ahead for a biotech company because they normally have a patent for around 10 years. And so I look for that midpoint to get a fairly decent average. And at $5 million per quarter, that's around $80 million growth per year. So that would put them at around $400 million at the 5-year mark. So say they managed to keep about $100 million of that and they had a 10x PE ratio, we would be looking at a $1 billion company. So that's already a 3x at the current valuation. So going back to the bear points, the next in the list is the Leqvio competitor. So before I was talking about the injectables market and how it's a $3 billion market, a very significant market. And before finding out about this competitor, I thought it might be possible that bempedoic acid could take some of that market. But Leqvio is already taking in $150 million per quarter. And to be honest, that's where I would have hoped that bempedoic acid would be around at this point in time. However, what this does mean is Leqvio is very likely to take that $3 billion market. And not only that, I wouldn't be surprised if some of the statin market will also go to Leqvio, because I imagine some of those patients just didn't want to have to take an injectable once every 2 weeks. And now that they only have to take it twice a year, I think that's going to be a much more attractive proposition for them. So the next ball point in the list is the heavy dilution. And this is really something quite significant. I've been having some help from some of the members of the StockTwits forum, and one of the contributors there, D. Johnson, has made a graph of exactly how extreme that has been. And you can see here just this really significant tick up. He's also added that this is where the management started here. And then I think it's like 10x or something ridiculous. So in my point of view, they've really been disrespectful to the shareholders here. I guess on a brighter note is that I'm hoping that this is now stopped. They've got quite a few milestone payments that they're expecting to come in, and the revenue is higher now. And also, if they do have this inflection point, then I'm not sure why they would need to dilute the shareholders anymore. So hopefully it has stopped, but it has shown that this management is willing to dilute shareholders if it wants to. Okay, so last for the bear points is the high debt to asset ratio. And at the moment, this is significantly high. It's actually over 2, which means they have twice as many liabilities as they do assets. So Dr. Bray from the StockTwits forum did remind me that they made a big deal this quarter, which means that they sold the European rights, and with that money they paid off a large chunk of the debt. However, this does not show up on their balance sheet at the moment, and the reason for that, I had a look into their 10K, is that the debt here has moved into royalty sale liability. So I assume once that royalty payment has been paid, then that debt to asset ratio will be a lot lower. And although a debt to asset ratio of over 1 still isn't good for a company, they still have a lot more milestone payments to come. So actually think of those milestone payments as paying off the debt that they currently have on the books, and then we're just looking at the revenue moving forward. Okay, so let's take a look at the stock price for the company and what that's been doing for the last year. And we can see here that it's been fairly flat. It's had some upticks, but then fallen back down. And it's actually fairly close to a low at this present point in time. So my overall views of the company are actually pretty good. It reminds me a lot of Heron Therapeutics, in fact, because they've had these drugs in the market that could be potential blockbusters, but they haven't been selling too well up until this point. But they've got an inflection point coming in the next few quarters for these companies, and we could see a really big turnaround. And also with Esperion, if they were just able to keep the growth that they already have, then this could already be a multi-bagger. And it also has the potential that sales could multiply from here. There are those risks though that growth has been slow, even though they had access to a 10 million patient market that could have potentially really needed this drug. So I would definitely recommend that you research this company further and decide for yourselves. So hopefully this video has given you a good introduction to this company, and I really would advise that you go and check out my videos for Ardalex and Verona.